Now, if you go on social media, there's no shortage of people trying to convince you that the market is going to crash at any minute. And these same people have been saying this for 4 years in a row. Look at your inventory going back to 2008. We have your data back to 2008.
Right now.
We're like half of that level. If your decision is contingent on interest rates, let's say you want to buy another home after you sell the current one you have, and you're waiting for rates to come down, I won't be the first person to have told you that refi is always an option down the road. So right now, we actually have pretty decent inventory. 2 years ago, you were lucky to see anything when you looked up what was listed at the time. Right now, you've got a lot more options. So not a bad time to buy from that perspective. You know, I can tell you what Palm Beach County did or Broward County did this month, but you know, if you go zip code by zip code, it could be very different within each of those counties. And you're also going to have realtors having different experiences.
Hey guys, and welcome back to RWorld Talk. I am your special guest host today, 2025 President Jonathan Lickstein, and today I'm really proud and appreciative to welcome Florida Realtors economist Dr. Brad O'Connor here today to talk to us about what's going on with the market. It's the number one question we always get. So Brad, I'm hoping we can get some insight from you today on how to answer that buzzing question, how's the market?
Yeah, that's a pretty broad question. Are we going to narrow this down a little bit?
Nope, that's it. 20 minutes, we're going to talk about how's the market.
Yeah.
Well, a big question that we get right now is affordability, right? That's kind of the name and the hesitation that so many consumers are alluding to that stop them from going forward. It certainly seems to be top of mind across the nation, let alone Florida. From your perspective, how are the rising home prices and interest rates reshaping who our target clientele is, who's buying here, and where's it going?
You're absolutely right. Affordability has ticked up as an issue from time to time here in South Florida, right? Over the years. You know, further south you get, that area of the state that's constrained between the ocean and the Everglades. So as you get down into Broward and Miami-Dade, there's nowhere to build necessarily. So there's not a lot of new inventory coming on except along the coast when you see all the luxury condos going up.
Yeah, they're not getting any more land.
Right. So you're not going to get any more land. And that keeps South Florida kind of constrained in terms of housing. If you look over on the West Coast, you know, over on the Gulf Coast, right now you would see a myriad of new neighborhoods coming online, and that's competing with the existing housing stock. So prices on the other side of the state are actually, you know, in decline right now, whereas here they've been pretty stable. There's just not as much competition from the new construction. So affordability, definitely an issue, not only here in South Florida right now, but the rest of the state, because home prices have gone up throughout the rest of the state as well, and the country, as you mentioned.
Right. I feel like we've had, I'm not going to say a market decline like you're seeing in other parts of the state, but everyone's prices were so inflated during the pandemic that what we've experienced, a slight correction of maybe a 5 to an 8% change in market value, is kind of a healthy thing. Where is it going in the future? Is the increase in demand from these interest rate changes, is that going to drive prices back up?
Yeah, and well, let's talk about first the people affected the most are your first time home buyers, right? And we're also seeing a lot less migration into the state because of this. Um, if you look at numbers, we look at like driver license exchange data because it's really up to date. We can get that from the state. Just, you know, you move from New York to Florida, you can change your driver license, and they can track which states you come from. And right now, we are seeing less movement into Florida from the Rust Belt. And that's entirely affordability driven. So even fewer folks from Ohio, Michigan, and Illinois than before the pandemic. Whereas we still see more New Yorkers coming down to Florida than we did before the pandemic. Not by a lot, but it's simply because the incomes are higher in the Northeast.
Right.
And you're also seeing more folks from California as well. So incomes definitely, there's definitely all this affordability sensitivity that you've got going on. So that's really limited how many people are coming down to Florida. And unless you're a first-time home buyer who has assistance from the bank of mom and dad, you're kind of in trouble right now. And then, of course, we've got the issues in the condo market, which would be the affordable segment that maybe you get into the home equity ladder on. And there's issues with condos.
So there have been a few events, obviously, that impact the immigration and the in-migration of people moving within Florida. How do you believe that the change, as you mentioned, affordability, the first-time homebuyers being mostly affected. I noticed over the last 5 years that the average age of a first-time homebuyer has gone up about 5 years or more.
Right. I think NAR's research team does really good survey work on home buyers, and I think their stat is that the typical first time home buyer today is older than the typical repeat buyer from I think the 1980s, 1990s, sometime 30, 40 years ago, which is incredible. It's in the late 30s now, right? So uh, definitely, you've got what has long been an engine of wealth building for citizens of this country is not readily available right now for the younger generations.
Do you believe that you had mentioned that we're still getting a good influx of buyers migrating from relocating from the Northeast, from New York, still coming into Florida? Do you believe that the return to work, the change from the remote focus into the return to work, impacted our marketplaces here?
To a degree, no, I haven't seen, it's probably been at least a year since I was really seeing lots of headlines about return to work, right? So I don't, I think maybe a lot of that return to work has, gone by the wayside and now everyone's pretty much locked into what they're doing. Lately, I don't know about you, but I haven't heard much about return to
I
work.
haven't either. I expected a bigger impact on the marketplace, and I was wondering.
Right.
Take
So there was somewhat of an adjustment back towards what was the pre-pandemic norm, but we're still, I think we're a lot closer to where we were, mid-pandemic right now in terms of hybrid or untethered workers.
So it's exciting times right now. For about 2 years, we've been waiting for this big affordability piece of the interest rates to get changed so we can get more of our buyers more affordable payments
Mhm.
and get them into homes. And we had a rate cut by the Fed that doesn't directly hit interest rates for buyers on a 30-year mortgage. Can you talk to us a little bit about how that ties in together and what we can expect to see from the Fed when they're talking about these cuts?
Right. So interest rates are predominantly, at least the longer term interest rates. So we're talking about like treasury bonds of 10 or 30 years, or you're talking about mortgage backed securities, which are made out of mortgages. Um, so the yields or the interest rates on these securities, including mortgage backed securities, are determined by the market. In other words, if investors aren't really into buying, your 10-year, 30-year government bond, then the government has to give them a higher interest rate yield so that they'll be incentivized to buy it. And the same thing goes with mortgages. When people aren't really interested in buying mortgage-backed securities, you've got to raise that yield. Um, at the same time, investors are buying, they have the option of buying shorter term securities, like the ones the Fed controls the interest rate for. So, that's a substitute. If you're thinking like an economist, and it's a substitute investment. So you have to think, okay, if the Fed's going to lower rates, then that is going to change the competitiveness with the higher rates, and that's why they're related. So these longer term rates, like a 30-year fixed mortgage, or a security built out of those, or the 10-year Treasury rate, they're related to what the Fed is controlling, which is very short term rates, like overnight lending rates, essentially. But they're not completely going to be in lockstep. So the Fed could cut, they just cut 25 basis points. Um, that doesn't automatically mean you get a 25 basis point cut in the interest rates, the longer term rates. In fact, the longer term rates often anticipate what the Fed's going to do. So they're already priced in. You can see that in data the past few times the Fed has done a lot of cuts, is that typically you'll see a drop in the longer term rates before the Fed even makes them, because by the time the Fed makes them, we're pretty sure they're going to do it.
Yeah, I've noticed that, and with the Fed promising, not promising, right? That's a bad word to use, but alluding to the fact that we should see a couple more cuts, then we should see ahead of time those long-term interest rates reduce, thereby increasing consumer confidence. It's exciting.
It is, but and we have seen over the last 2 months a pretty significant amount of movement on our mortgage rates. They've come down closer to 6%, here in September. So
I saw somebody lock in at 5.5 the other day.
keep an eye out what happens to new contracts, because they started falling in August. So when you look at the new pending sales statistics, look for how many new contracts came out. You might see a little pop there.
Love to see that. It's exciting as a salesperson and managing a large sales team. It's exciting times for us right
Right,
now.
right.
I'm a little giddy. When you talk about our housing market down here, Broward, Palm Beach, St. Lucie counties, what's a key indication or a key point that really sticks out to you?
Yeah, so I've been, traveling the state pretty significantly this summer, and when I do that, every time I come and give a local presentation, I bring the local data. I mean, people care about the Florida statewide data, but they really care
It's
about the
about the
local
local.
market, right?
Yeah.
And throughout a lot of the pandemic, there was a lot of similarities across the state, and we're finally seeing some divergence. I already picked up on one or told you about one of them, which is inventory and prices are behaving differently in areas that have had a lot of new construction. So if you think about Southwest Florida or Central Florida, between but not inclusive of Tampa and Orlando, so we're talking about like Lakeland up through the villages,
Right.
you have seen a ton of new construction, and that's where price growth has been the weakest, and that's where inventory growth has been the highest. South Florida has been quite the opposite. It's been the opposite end of the spectrum. You have not seen significant levels of inventory growth relative to the rest of the state, and your prices have been more stable. In fact, most months this year, I don't have the numbers in front of me, but I would wager you're still seeing slightly increasing prices on a year over year.
Yeah, just at a small percentage, but we're still seeing it hold
Mhm.
strong, really. That average price, and even the volume has held pretty consistent over the last 18
Mhm.
months that we've been in this kind of struggling, we'll call it struggling market where there's less demand, right?
Right.
Supply and demand is just such an easy correlation to see what's going on. And with the reduction in demand and the increase of supply we've had, I'm a little surprised that our marketplace has held up as well as it has. Um, why do you think that is?
I think one, we've just been trained by folks around the country to think, well, if it goes bad in Florida first, and within Florida, maybe South Florida is always the leader of going bad, but that's not true at all. Um, so, so I mean, yeah, if you look back in 2008 and nine, our numbers did not look good. But there's a reason why so many people live here. It's because they want to, right? They want to be here. There are jobs. There is a lot to do, and it's an exciting place to be. Um, when prices get elevated and affordability becomes challenging, it makes it hard for people to come here, and so then they start branching out, and you see more strength maybe in the less densely populated areas, like maybe further up along the coast, or we've seen data. It's 2 years old data at this point, but even then, when prices were going up, you started to see folks with lower incomes moving out of this area and to other parts of Florida that were more affordable, and they've been replaced by folks from out of state who are coming in and bringing in very sizable incomes. That can create challenges for your community, like if you lose some of your workforce for the restaurants and then the local services you have. Um, so I'm not saying this is a good or bad thing. It just depends on who you are, right? So
It's just a thing.
it's just a thing. Yeah, it's a dynamic that we're following for sure. So that's your area is obviously different than you're gonna find. That's what I love about being the chief economist at Florida Realtors is this state. If you're not from here, you quickly learn how huge it is. For one thing, I've had to drive the whole state several times. So loving Brightline, by the way, that's how I got down here from Orlando today. But how diverse it is in so many ways.
Speaking of diversity, and I feel I want to go back to what you just mentioned. I feel like Southeast Florida is such an entrepreneurial marketplace that we were so affected in '08 and '09 because the local entrepreneurs or the startups were doing these investment properties on stated income, et cetera, that it blew up in our faces bigger because of the entrepreneurial mindset in Southeast Florida. But being so diverse and such a thing down here, there's people on all ends of the spectrum when it comes to real estate sales and agents. Some are saying it's impossible to get their buyers off the sidelines. It's not affordable to them. And you have others saying that they're busier than ever. So what is it? What is the common feeling out there and how do we overcome it?
That is one thing that's one of the reasons why I try to get all over the state. So, I could sit in Orlando and do a Zoom to the whole realtor association across the state and hit a lot of people and be done with it. But I love studying the local markets. And then I learn as much from you guys as you learn from me. Probably I learn more from you getting out and, I see your MLS data and I'm putting together statistics with it, but I don't know what's happening on the ground. So when I go out and I show people their data, they can give me context as to what the numbers mean and what they're seeing with the members, and that's so useful for me. At the same time, if you see enough people, you're going to hear a lot of different opinions, and that's one thing we always got to worry about with the statistics is, I can tell you what Palm Beach County did or Broward County did this month, but if you go zip code by zip code, it could be very different within each of those counties, right? And you're also going to have realtors having different experiences. On whole, though, I can just tell you that broadly in this area, we're seeing very stable home prices. Sales are down probably more than they are statewide, probably because of the persistently high home prices. There's not a lot of people giving in on home prices who are trying to sell right now. You're probably seeing more people delist than rather than part with their properties.
Kind of trying to time the market, not sit on market and be stale, refresh and reassess that in like 30 days.
Yeah, exactly. So most of the time, people, there are parts of the market in other parts of the state where people are selling simply because they have to. There's always going to be sellers because of life changes. You get married, divorced,
Yeah.
downsize,
Need-based moves.
upsize.
Yeah.
All of that is always going to cause some churn in the housing market. And right now, some of those folks are having to accept, lower prices. I have a couple friends from my neighborhood who just moved out of state for jobs and took what they considered a pretty big loss. Now, we can't necessarily go back to 2022 and think, well, that was the highest my home was ever valued, so that's what it's worth forever now, right? We don't have this.
Some fellas will feel that way, right?
Some do, right? And you get very attached to that peak number, um, but essentially, uh, what we're seeing in this area is lower sales, I think, than you're seeing maybe elsewhere in the state, simply because of that affordability level and the lack of new inventory to sell.
Everyone's trying to time the market right. Sellers want to sell when it's highest and they can get the most out of their property in the shortest amount of time. And buyers, everybody's a real estate investor and they want to buy at the lowest price. When in reality, over the 30-year mortgage, in the long term, property values always ultimately go up. They'll, teeter back and forth, but in the end, they always go up. So what would be a piece of advice you could give? Is it time it right? Is it set it up? What is your piece of advice for a buyer or a seller when they should enter that quote unquote perfect time of the marketplace?
Right. Well, I mean, there's for one thing, if your decision is contingent on interest rates, let's say you want to buy another home after you sell the current one you have, and you're waiting for rates to come down. I mean, I won't be the first person to have told you that refi is always an option down the road. So right now we actually have pretty decent inventory. 2 years ago, if you were in the market for a home, you were lucky to get anything, right? You were lucky to see anything when you looked up what was listed at the time, because inventory was so low, everything was selling in 3 seconds. Right now, you've got a lot more options. So not a bad time to buy from that perspective. Uh, in general, timing a market is extremely difficult, right? Like I'm not going to tell anyone. I'll tell you right now, I don't know when the market will be perfect for you to sell. I can get a general sense, I think, of what interest rates will be 12 months from now, but it's a range. It's not a specific number. Um, so yeah, very difficult to pin that point.
I hear people saying right now, just consumers that maybe are in the market now or they wanted to be in the market now, but it's the affordability factors affecting them. They're
Well,
looking
that's
back.
why we're seeing interest rates fall. Even if rates don't fall much further from here, then you will have a gradual decline in home prices. It's not going to be a big drop. It's going to be gradual. As people are forced to sell because of life changes, they will accept lower prices, and that will drag home prices down slowly. Or maybe we get down to 6% or even lower than that. And I think then the market would really start to pop. And I'm not saying we see home price growth like we did in 21 anymore, but we would
No.
see a return to normal level. A normal looking market is attainable. We still have this is very technical, but the spread between the 10-year treasury and the 30-year fixed mortgage rate is usually between 1.5 to 2 percentage points. It's been elevated well above that for the last 3 years, but it is coming down gradually. I still think we could squeeze another half point out of that, maybe a quarter to a half point, which would put us around 6 or a little below, and
That's a healthy
that would
spot.
unlock a lot of buyers who are, a lot of people left out in the cold in 21 and 22 when there was no inventory available and people were outbid at every turn, right?
Yeah, everyone in 21 and 22
Anyone who needed to finance, and there was always seemed to be a cash buyer who would come up at the last minute,
right around the corner.
right? So So we've got a good situation for affordability coming if we can continue to see these rates fall a little bit.
Yeah, everyone in 2021 and 22 said, "Man, I wish I bought in 2020," but they're forgetting what their mindset was in 2020 about
Right.
doomsday and the world ending and them just staying alive, right?
Right.
Let alone working.
Yeah.
So, even now we look back and saying, "Oh, wow, I wish I bought in 2020."
That said, I am still amazed how fast our market turned around.
Unbelievable.
My call in March or April of 2020 was um, that I thought home prices would remain stable, but I don't remember what my call for number of sales was, but that was wrong. Home prices remained stable and actually started rising by
I
the
think everybody was wrong at that time.
so the only thing I got right was prices being stable, but I had no idea that by July we would be seeing record numbers of sales,
Right.
and the rest of the year was like that. So
In the end, it's when it's the right time for you as a buyer to make that move and that decision. The home value in the end will be fine. It'll go up in the end. You're sitting on the largest investment and the most well-rounded asset for the future of you and your family. But don't stress about it. If you can afford the payment, you can afford the home. Do what's right for your family. Let's move into a bigger picture conversation. You had alluded a little bit to the immigration that's happening, the relocation that's still happening, job growth, overall economy. Where do you think will have the which of these do you think will have the most significant impact on our market in the coming year?
honestly, I still think interest rates are the big driver. I know we've talked about them ad nauseum, but there's a reason why we've been talking about them the whole time. Is that I still think they're by far the biggest driver for demand. So it's funny. Florida's job growth is actually a little sluggish right now. It's a little slow for us. We're still above the rate of the nation overall. So I think we're growing jobs maybe at a 1.33% growth rate annually. So, next year we might have 1.33% more jobs than we do now. The nation as a whole is more like 1%. So, but normally we would be up around 2%. I think in normal times, at least in the previous decade, that's where we were at. So that's slowing down. But oddly enough, for Florida, I think the national labor market is more important because that's what the Fed is queuing off of. They're looking at the national data. So that I think is and part of the reason we're not seeing as much job growth now is because people are moving here at the rate they were. They were bringing jobs with them. It wasn't the case where they were coming for jobs that were open so much as
Right.
bringing their jobs from up north down with them. So that's why we've slowed down a little bit. But nationally is that's what matters to the Fed. They're just looking at the national labor numbers and they're looking at the national inflation numbers, and those are the two most important pieces of data they're looking at when they're determining what they're going to do with interest rates.
So we've always been an attractive state for people to move their businesses, mostly due to the tax benefits, right?
Right.
But we had a lot of relocation coming in over the last several years. Do you feel that that has contributed? Everyone who was going to move their business has already done so, or do you think there's any big plans that will increase the jobs down here too?
I think that there is, I can't estimate it, but I can say that I believe the reason why the rate of that happening has slowed down is almost entirely affordability and not necessarily a reduction in, latent demand for coming to Florida. I think, the number of people who've come to Florida, particularly South Florida over the last 3 or 4 years, they're going to talk to their friends back up north, and they haven't gone back yet. I mean, we keep seeing people try to find data that show everyone's going back, but I haven't seen that data yet. Um, so just looking at that, I think the people who didn't jump and make the move when they had the chance when affordability was better are still very open to doing it if affordability does improve.
So throughout 2025, there's one hot buzzword I'm just going to say is going to get tied to 2025, and it's the word tariff. I've heard so many conflicting opinions regarding the major Canadian population that we have here in Southeast Florida and what they're doing or what they're deciding to do. Are they liquidating? Are they leaving? What is the trend that you're seeing?
Well, we do an annual survey on international buyers and sellers, where we actually interview we try to survey the entire realtor population in Florida about whether they're doing any international deals each year. We are currently in the middle of that, right? So we usually do it around this time of year, and then the results come out in the fall. We did ask about some of those things, foreign policy and U.S. political climate, if those are having an impact on your buyers. So we'll have an answer for you maybe a little later, maybe 3 months down the line. But right now, we don't. I can only go by what's anecdotally being reported in the papers, and you can never really know
No.
for sure if that's reflective of the overall market.
I know you mentioned to me before that you were doing the global thing, but it's me. I had to put you on the spot and see if I could get anything out of you. So personally speaking, at your own personal opinion, what's something about the economic climate or the housing market in Florida that kind of keeps you up at night? And where are you most optimistic?
Right now, there's nothing really keeping me up at night. Maybe 2 or 3 years ago, if you'd asked me that, there was a lot more fear of a price collapse back then. And just
Everyone was saying,
everything was so uncertain. We had never been through a market like that before. And the fact that the previous housing cycle ended in a housing price crash, and that's what was on top of me. That's seared into all of our minds. If you were around at that point, that's still seared into your.
that was the start of my career. Heck of a way to start off.
Yeah, yeah, yeah. That's a great. Yeah, not the best time to be starting. Um, so given that, I would literally not be able to sleep because I would be constantly thinking, I'm not seeing anything that could cause this price crash, but if I miss it, I'm going to, like I've been a Florida realtor since 2011, and have gradually gotten to know, you and so many other realtors across our state, and to the point where, I care about you guys to the point where I have to, if I'm going to be analyzing your market, I have to shut that part of my brain off and just, so I can give you
The raw
the
details.
honest
Yeah.
assessment, because I'm rooting for all of you, right? Um, so because of that, that would get me up, right? Because you get people come up to you at a convention and say, "I love you, Dr. O'Connor. You're the only person I listen to except for Lawrence, the guy, my counterpart at
Yeah.
NAR." And I'm like, "That's probably not a good idea, but thank you. You should listen to more ideas from other people, um, that's flattering and at the same time terrifying, right?" That's what would keep me up at night. But more and more as we've gone through this, I'm like, wow, you know what? I was just right. Maybe I should have been more confident in myself, but right now we don't see any way. The only way you get a lot of price crashes is if you have a flood of supply, and there's just nowhere to get that supply from. There's no danger of another foreclosure wave like we had last time.
Right. And everyone's been talking about that. Not everyone, but I've heard that a lot. There's a wave coming. There's a wave coming. I've been hearing that for going on 4 years now. Where's the wave?
Right.
Feel like I'm sitting at the beach with a surfboard.
Believe it, but it's been about 3 years since prices stopped rising. So, as time goes, you would have thought if it were going to happen, it would have happened by now.
Yeah. When you're hearing all these narratives of the market's going to crash, the bubble's going to burst, et cetera, and you don't see any indication of that economically speaking or through the numbers, the data, how does that really affect you? Do you kind of second guess your own opinion and you're digging for it? Or do you kind of at that point discard everything and, hey, the numbers are the numbers, period?
Now, if you go on social media, there's no shortage of people trying to convince you that the market is going to crash at any minute, and these same people have been saying this for 4 years in a row. There's a few out there. If you're on social media at all, if you're on Twitter or X or whatever, or any of these other platforms, you're probably familiar with some of them. They use the same tactics. They will post maps that show the number of listings. Sometimes they do it for Airbnbs. Sometimes they do it for just overall inventory. And it's a map full of these little, red pins that you would find like if you were on Google Maps, and they cover the whole map. But honestly, if you were to actually shrink the size of those pins, it would, to the size of the lots that were for sale, it would actually show that a very small majority of homes are actually for sale, but they make them really big so it covers the whole screen.
Right.
It's just an optical illusion. The other thing they do is show you the inventory chart, but only back to 2017 or 2018, when, we have more inventory than we did then. But if you go back to 2008, which you can do with Florida Realtor Sunstats, by the way, not to plug our own product, but if you go to Sunstats, .floridarealtors.org, you can log in and see our data for your area. Look at your inventory going back to 2008. We have your data
We're
back
like
to 2008.
right now.
We're like half of that level, right? So those are the things that really get to me. But they continue to try. There is an appetite out there. There are people like we talked about who got left out in the cold in 2021 and weren't able to get that home they wanted, and they are rooting for prices to crash. And a lot of people just want to be, and it's because they want a home so bad.
Yeah.
So I don't have any ill will towards those people. I do have ill will towards the people who are trying to mislead them and get either get them to sign up for their service or product or whatever because they're succeeding in scaring people.
I hate to spoil it for them, but I don't think they're coming down that far.
Right.
I don't at all. So if you, number one, we're really excited to see the August numbers come out. Thank you for that. And then, of course, the global report, because we'll get a lot of insight for the melting pot of international marketplaces that we have here in Southeast Florida. That's a huge indicator and driver for us. But if you've ever listened to Dr. Brad O'Connor speak, I know you have because you are Dr. Brad O'Connor, but if any of our listeners have listened to you before, we know that you are the economist with the best dad jokes. And I take pride in my ability to convey a dad joke. So before we sign off here, give me your dad joke of the day.
Oh man, they come spontaneously, so it's not something I just have queued up. It just happens.
There's nothing about jumping on the train today and the economy and where we're
The other
going.
thing is that as you know, my sense of humor is extremely dry. So anyone who's just listening to the podcast will not know I'm joking most of the time. They have to actually see my face, and even then, I pretty much deadpan it. So the first time people see me speaking, I'm usually, some people are going to think I'm serious about everything I'm saying when I'm clearly not. So. Uh,
Well, we appreciate you coming here and making the trip down from Orlando. So thank you for being here on Our World Talk. And we are so honored for you to spend your time with us for sure and give us these insights. And always for you and the team with what you guys provide through SunStats and the data from Florida Realtors. We are indebted to you for the access and information you provide.
I
Thanks so
appreciate
much.
it. It's good to be here.